Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft, and for more than 10 years with SNN, I've been doing interviews with MicroCap management teams at investor conferences globally as well as online. Our SNN Live CEO video interviews are meant to pique interest, and then one can discover more by going to that company website. But personally, I always have more questions I want to ask. On this show, I'll be chatting with public company executives from microcap companies, and we'll dive deeper into companies that are rarely profiled. Microcap traditionally is overlooked, unloved, and absolutely never featured on legacy financial media outlets unless something material is going on that's a good story. With my experience interviewing management teams, having interviewed most of them before, I've built up a network of companies, so there will be no shortage of content. Furthermore, this is an opportunity for me to showcase some of the qualitative lessons I've learned from guests on the Planet MicroCap podcast. You can expect high-quality interviews with management teams that may have exposure to broader macro trends that you may never have thought of. One of the many reasons why I love the microcap space. So if you love microcaps and especially love learning about companies before the professionals do, let's start our due diligence. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Cameron Reynolds, President and CEO of VolitionRx Limited, publicly traded company. The symbol is VNRX on the NYSE American. Volition is a multinational epigenetics company that applies its Nucleosomics platform through its subsidiaries to develop blood tests to help diagnose and monitor a range of life-altering diseases, including some cancers and diseases associated with NETosis, such as sepsis and COVID-19. While the company has primarily been focused on human diagnostics and monitoring, it also has a subsidiary focused on animal diagnostics and monitoring. Even though Volition's animal diagnostics and monitoring subsidiary is relatively new, the company recently announced a $28 million deal with Heska Corporation for their low-cost animal cancer screening and monitoring tests. I've known Volition for a long time and wanted to chat with Cameron about animal diagnostics and monitoring subsidiary, how the subsidiary fits with Volition's strategy moving forward, current status on their clinical trials for their blood tests, and what Cameron thinks about the potential for their NETosis product. With that, please enjoy my conversation with Cameron Reynolds, President and CEO of VolitionRx. Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today is Cameron Reynolds. He is the President and CEO of VolitionRx Limited. It's a publicly traded company. The symbol is VNRX on the NYSE American. Cameron, thank you so much for joining me today. How are you doing?
I'm fantastic. Thank you. It's great to be here.
It's great to have you on. Now, for full disclosure, Volition has been participants at many of our events over the years. I've been following the company for a long time. And so, but the funniest part is this is our first time doing an interview together, which is hilarious. I've seen you present forever. I feel like we're mishpucha at this point, but I appreciate it again. So I want to start off, for those that aren't familiar with the story, and I know there's some of my audience, like I said, Volition has been in a lot of events. We've done a lot of IR work, but from your perspective, what would you say is that one line that best describes Volition today?
One line. I like to talk, so one line can be tough, but we're a very innovative epigenetics company that is now launching a range of products. It's probably how I would describe us today.
Got it. And as one of the founders of the company back in 2010, what would you say was the original problem VolitionRx was trying to solve, and how has that evolved or changed over time?
We've always been looking at the same epigenetic markers. Epigenetics means above genetics, so it's what can be read from the DNA. So we developed a platform, and it's taken some time. It's a very, very exciting, cutting-edge area. But I think what made us different was we're looking at very, very unique novel markers, but with a very long-standing platform. So that really makes us a platform of platforms. So what we can do with this, looking for what we look for many different things. So we started just in the cancer space, but cancer diagnostic, and what we're filling is a truly routine blood test. Now you might say, what's routine? What does it actually mean? Routine just means you sit in the doctor's office and they tick an extra box with all the other things you do. So that really comes with a low price, in the tens or low hundreds of dollars, and a small amount of blood, and can be run anywhere. So, and the markers we're after, the epigenetic markers, can absolutely be a very good early sign of cancer. How we've changed, purely during the pandemic, and we thought the lockdowns might last a few months, and we're almost into the third year, so that we changed tack a little bit just to use the same platform. We're very serious about cancer in humans, but we decided to transition to the dog cancers, same platform, same test. It's really quite remarkable. And on NETosis, two things that we could do during the pandemic with our fantastic proprietary platform. So we're doing the same thing, but we're just using the platform in different ways. In these times, you've got to adapt and do what's best at the time. So we've exactly the same idea, exactly the same platform, but we've really learned to adapt and do the best thing we can at the time.
Got it. And we'll dig into that in a second on the technology platform where we're at today. But what was your background prior to founding VolitionRx?
It's a good question. I'm Australian. My accent's not as strong as it once was, but I still talk too fast. But that's not my accent. I've traveled the world a lot. I've lived in quite a few countries, including the US, including Canada, through Europe and through Asia. Working on a lot of different entrepreneurial businesses. I find people and projects fascinating, and I've worked in industries as varied as life sciences, like in the 90s when we were commercializing cloning, believe it or not, of mice. And also being Australian, you kind of got to do some mining projects. That's just what we are. So my background is entrepreneurial. My education is a finance and MBA degree. But I find new projects different. I really like to look for things which perhaps, I think there's a real herd mentality in a lot of areas, and everyone kind of does what everyone else does. When Volition came along, I just thought, wow, this is something which is really unique. I've not worked in this space before, but I think fresh eyes and really good people who know what they're doing on the technical side put together is a really good combination. So I guess that's kind of what I do. I really believe a company's about its people. It's funny, I've said this a few times, but you think when you're young, you kind of say it because you believe it, you think, oh, people are important, but I'm 51 now, I've done this for 30 years, it really comes down to the team. So my background really has been trying to find something really good, innovative to run with, and put together a great team, and really stick to quality and getting it done as well as you can.
Absolutely. And I really appreciate that. I mean, look, I'm sure over the years, everyone's like, wait, you're not an MD, you don't have an R&D, you don't come from big pharma, and now here you are running, a diagnostics company, huh? I'm sure that's been how often was that asked to you? I'm sure almost every event.
And fair enough, but I think actually, if you understand people and you understand the business, most businesses are actually quite, at their heart, quite simple. There's a lot of very complicated things which you need very smart people who know what they're doing to do, but the basic business strategy and the process is actually reasonably similar. So yeah, absolutely. And I think, I'm sure every CEO says, oh, our company's undervalued, and I understand why we're valued why we are. We're doing something very different. We're in a very innovative space. We've taken time to develop this fantastic platform. And I think, I'm not someone who's 30 years of pharma experience from a big company. It's funny though, I've worked with a lot of people in startups and a lot of different companies. It's very, very hard to make a big company, small company switch. and particularly I'm talking about from big companies to small companies. It's a very different attitude, a very different process. You really got to have a whole different mindset. We started Volition just with the three of us in my lounge room in London, and to grow that to a company, which also means I think I'd probably make very bad for a very massive pharma company. One of the companies where you start in your entire career in the same company. But I think that entrepreneurial edge, asking the right questions, believing the right people, and I think you've got to have an inner belief in what you're doing, because everyone tries to push you one way or the other, launch products when you're not ready, and also, you ask the question. It's funny, you get asked that question a lot. If this is so good, why isn't someone else doing it? I would mention the big company names, we all know them. But I think I would always put that around. Why is it? It doesn't matter. The truth, well, a lie. It's not a lie, but repeated 1,000 times is still not true. Just got to think the basics. And in our space, it was in the cancer detection. It was circulating tumor cells. When we started, everyone said all the big monies with all the big companies doing all the circulating tumor cells. And the question I had with Volition was was basically, is it correct? Not who else does it? Is it the process? Is it correct? And that really should be the ultimate aim. And have 50 people tried and failed, or has no one really tried? And doing what we're doing, no one has really tried, which to me seems a reason to do it, if it makes sense. And, I've sat through hundreds and hundreds and hundreds of meetings with team members, like our scientific team, with the smartest people in the space who have 2 PhDs and an MD and all those other things. And not one single one of them has ever had a reason this is not going to work. Yeah. But, they all say, well, look, circulating tumor cells. And in the last 7 years, it's all been DNA, genetics. But it's funny, our scientific team said things which made perfect sense to me. And you'd have to say they've absolutely been proven correct. Those markers, the circulating tumor cells, DNA, fantastic. But if there's not very much of it there, and you might only have 8 events in your entire bloodstream, so that's why they have to take huge amounts of blood from you. You're looking, it doesn't matter how much supercomputing and whiz-bang and great papers and everyone agrees with you. If it's not there in quantity, you're not going to find it. And that's exactly what's happened. Epigenetics, it's really changed in the last 2 years. It was funny, even a couple of years ago, like, oh, epigenetics, that's cute. We're genetics companies, we're going to have solved world hunger and peace. And every single one of them has now really shifted their focus to epigenetics. So I think counterintuitively, and if you look at a lot of the companies where people have started up something that's kind of done something different and broken through, it's people who really came with fresh eyes on the whole question and really asked the right question. So I certainly hope that's where we are, and I think we're on the verge of proving that now. I think the claims made to me by a chief scientist in 2010 were probably grossly underestimating the power of what we're doing.
Absolutely. No, you brought up a couple rabbit holes I wanted to go down. I mean, and let's go there first. I mean, I know probably some folks are listening and like, I'm still not sure exactly what the company's up to, but we'll get there. I promise. There was 2 things I had to follow up right now. And, having the background that you do, not in the healthcare tech side of things, how did you get to a point where you knew like, okay, I trust the scientists that I'm working with and with what they're saying and telling me, that I'm now with full confidence, I feel confident in relaying that message now to potential investors, to my, to folks who are like me that don't have that technical background. That was probably a big learning curve for you, I would assume.
Yeah, it is. I mean, our chief scientists, Jake and Mark, both very good pedigree in the field. I mean, Jake's the first person to explain it to me. He worked for the World Health Organization for decades, and also the NHS, the National Health System in the UK. It actually comes to, it's complicated, but it's simple. Are they there? Are they different? Can you measure them? I mean, I was also involved in mining. Mining actually is kind of simple and basic. Is there enough of it there? Can you make a profit pulling it out and shipping it out? It's actually the simple questions which you ask. And so the basic question, are nucleosomes there? 100%. I mean, it's a fact. Are they measurable? Yes. I mean, we had the first simple assays we made from ELISA, ELISA is the platform, which is at its heart just 2 antibodies. Is there anything else out there which could be better than it? I think what we will really dominate is the value end of the market, if you will. I think the complicated companies will get there. If you put enough markers together and enough platforms together, you're going to get something which works. But you're looking at just outrageous costs and complexity compared to what we do. 20, 30, 40, 50, 100, 200 times the cost. So so answer the question. It's intuition. It's the process. You believe in the people. You believe in the and you look at it, and so you see them talking to people who really know what they're talking about in the technical sense, and just make a judgment. I mean, I had to be pretty certain. I've spent my entire 40s doing this. There's many things I could have been doing apart from this, but I think you've got to be committed. You've got to stick to it, but you've got to evaluate as well. You can't just be a zealot that this is going to work, and no matter what else. But there's never been a point where anyone's shown any evidence this is not going to work. Now, you've obviously there's a lot of 2 steps forward, one back, one sideways when you're developing an entirely new epigenetic platform. But you've got to have that strong inner core and the belief. But you've also got to, it sounds counterintuitive or contradictory, but you've also kind of got to accept that you've got to listen and see if there's any showstoppers. But there really haven't been. So it's a mixture of both of those, which sounds kind of counterintuitive, but you've got to keep a finger on the pulse of both of them.
No, I got you. All right. So let's dive deeper into the business itself. So let's start with the technology, with the platform. Can you describe Volition's? It's called Nucleosomics platform, correct? Right. So can you describe it a little bit? How in theory it's supposed to work, and then what is the company's current focus right now?
Absolutely. So as I said, there's genetics, which is your DNA, and the epigenetics, which is what can be read from the DNA. Sounds complicated, but again, there's simple ways of understanding it. Think of it this way: the hardware, like your computer, is the DNA. It's the record, and the epigenetics is the software, what's run from it in the process. So both are very important, and the industry's really been focusing on the DNA, because that was, you probably know the genome was sequenced, and and it's important. I mean, no one's going to say it's not important, but the epigenetics has been overlooked. So one of the biggest epigenetic markers, the important one, is if you unravel the DNA, every 200 base pairs, there's a nucleosome. So there's about 20 million in each cell. And these are complicated switching mechanisms of hundreds of different histone modifications, which control what can be read where and when and how. And it's all wound up tightly, so it only opens for bits that are supposed to be read. So it's amazing. The entire, and it's actually, it's quite remarkable, religiously or spiritually or scientifically, whatever your predilection is. I mean, we have the same DNA as dogs, yeast, a huge amount of living things. It's unbelievable. So it's a basic building block of life. So for example, another analogy, the DNA is the map and of the city, for example, and your epigenetics decides what's built when, what's torn down. So obviously both important in your system. So how does that work diagnostically? So let's look at cancer, our primary focus early on, and one of our major focuses now. Obviously, the epigenetic changes are the first start of the genesis of the cancer. Very simplistically, it's reproduce, and when obviously that can be problematic. So there's different histone modifications, signaling on your epigenetic structure on the nucleosomes in the cell. But quite clearly, you're not going to give biopsies to every cell in your body, to every organ of your body looking for a cancer, so it's not a diagnostic. But what happens is when cells die, the body cuts up the chromatin into nucleosome-sized chunks, again, 150, 200 base pairs of DNA with a large protein structure to be reprocessed. So when you have cancer and a range of other things, which I can get to later, you have a lot more of these circulating in your blood. But the secret sauce is not just more of them, they have these different switching signals on them, which can be read very, very simply and cheaply with 2 antibodies. One grabs hold of the nucleosome, the other marks whatever marker is more or less common. And that's the heart of epigenetic signaling, which we go for. And it has a huge amount of information, but it can be a very democratic, very open product because it's on a very open platform. And our cost of goods, given it's just a few antibodies, can come down to a few dollars per test. So it can be tremendously profitable, even at a very, very acceptable price point, even in the developing world. So very, very exciting. And that's where we started. And I guess we'll go on to the vet space and NETosis and capture and everything else. But once you can really measurably, reproducibly, and robustly measure these very quickly on a simple platform, it opens up a plethora of options, all of which are under our intellectual property.
Right. And so you alluded to the second part of that question was, what's the company's focus right now? So it's really
right.
Okay. Yeah.
So the focus was up until 2020 to get the platform stable, because it doesn't matter how all the other things you can do with the platform if it's not reproducible. Reproducible means you get the same result today, tomorrow in one lab, here a lab in Connecticut, a lab in Italy, a lab in China. And that's extremely important for a lot of very obvious reasons. You want to make sure you're measuring what you are measuring. And we had to go through a tremendous amount of work with the antibodies, with the controls. This facility, which obviously is a fake background, this facility is our facility in Belgium. We had to get 20,000 square foot. And has now 65 people in this one building down the road, just going through the basics of making sure it works really well, because that's absolutely crucial, and on a lot of platforms. So what's the focus? So coming into 2020, we were just in the process of launching our first human cancer products. Again, differential there is huge. It can be a normal test, just a drop of blood. After Theranos, it's tough saying a drop of blood, but we really are a drop of blood. So I have to say it. And it can be run in any lab, and it's low cost. Then I guess February of 2020 came along. We thought, we'll have a few months to work on something else. That's 2 years, but the trials in the US were paused. It's very tough to get someone to go into hospital a lot during the pandemic, which makes sense for a trial. And so we thought, well, let's just, they've been paused on us, so let's just use this time. So we just signed a deal with Texas A&M, one of the world's best vet schools. They came to us and through the Walloon region and said, the problem in animals is even worse than in humans. There's nothing which really works for detecting cancer in animals. And I think, like everyone, and probably you too, you thought, wow, is this a bit of a sideline? What is this? Is it a distraction? It's exactly the same as this is the absolute genius of our platform. We sent the human kits. Actually, the joke was we're the first company to do human trials for a vet launch for animal product. But anyway, it worked absolutely brilliantly, particularly on two very important dog cancers, hemangiosarcoma and lymphoma, which make up about a third of cancers in dogs. So I guess you have a question on the vet side in a bit. And then it also became very apparent what kills you in a very wide range of conditions, including COVID, which is coming and hopefully going. But things which are tragically with us all day, every day, things like sepsis, which is the biggest killer in hospitals, heart attack, strokes, are very strongly driven by NETosis. Again, how does that? You're a cancer company. What the hell is this? What are you doing? Exactly the same platform. So we don't measure cancer. We measure the chromatin fragments. We don't measure COVID or sepsis or any of those other things. We measure the chromatin fragments, the nucleosomes. So it turns out your body's primary defense mechanism is something called a net. I'll go through all that later. And that's made up of what we measure. So it's a very good to know what that looks like, a whole lot of reasons. So we're focused on NETosis, and that could easily be bigger than all the things we have put together. So the focus is really on generating revenue from our platform. So we've made a big vet team, launched the first product, had a fantastic deal we announced last week, and our first deal, which we'll get to. We're in the process now of getting regulatory approval for our NETosis product. And of course, we're very serious about the human cancers. But that's sort of been in the process because of the pandemic and the lockdowns. It was tough to do the trials. So the focus has always been on quality of the platform to make sure it really works. And now we've done the hard yards, got it working really well. It's on lots of different platforms. And what does that mean? Different platforms? It means you can do we're working on a pinprick for a point of care, like a pregnancy test. Microtiter plates, which can be run in any lab, big machines, small machines. So the idea is it just becomes part of your normal blood work for a whole lot of things, which would then make us tremendously useful to save a huge amount of lives and hopefully also for our shareholders, make a very, very profitable company.
Absolutely. And I can really appreciate having to do the pivot in a sense. And it's not really a true pivot because you are working on all the same stuff you've been working on for years, but now going into this commercial stage where I think let's get into that, because that was a huge deal, where the company just, you guys announced it was a $28 million deal with Heska, for basically, sorry, I'm just going for my notes, but I think from there it said about the company expects to be selling millions of tests per year in a few years, and that the company will get $10 per test at a 90% margin vis-a-vis this deal. So correct me if I'm wrong on any of those deal details, but I think it's important to go through that now, because I think that showcases what the commercial strategy really looks like for the Nu.Q vet cancer test product, right?
Yeah, so Heska's a great company, and like they're further progressed. They're a bit multi-billion, $1 to $2 billion company. They're further down the road, really well run, really high growth, and they're entrepreneurial as well. They've realised that the cancer market in dogs, all animals, is basically zero. There was another competitor came to the market very recently, PetDX, but that has that complicated, expensive test, which, good luck to them, but it's a different offering to what we do. So Heska was very keen. Their whole thing is point of care. So they have a machine which can be put into vets' offices, and that's how they see, and I think they're probably right. The point of care is going to grow. It's roughly 20% now, to grow to become the majority of the market over time, and they want to be a big part of that. So a very good way for them to do that is offer our test. Now, you're probably familiar, cancer in dogs is just really rampant. For several reasons, they're very inbred. So, pure breeds are very, very inbred. So cancer is very common. Also, it's 2 to 3 times more dog cancers every year than human cancers. So how's that? There's 1/4 of the dogs as humans. They get cancer at 8 years old, 9 years old, not 90 or 80 or 70. So obviously, if you take the life years, it all makes sense. So there's just nothing. We spend a lot of money on our pets. Actually, most dogs go to the dogs are getting to the age where they get cancer, 7, 8, 9, 10, or risky breeds. So the price of our test is really nothing compared to all the things that currently Heska's looking to retail to the pet owner for $50 or less. That's a huge breakthrough. There's just nothing out there whatsoever which works in dogs. So if you suspect the dog of having cancer, you have to do things like a scan. You're probably familiar with scans in humans, but dogs obviously can't be told to stay still. So you've got to sedate them. And also, during the pandemic, we're getting closer and closer to our dogs. We're getting more of them, and we're spending more and more money on them. So it's the perfect time to be in the vet market. And I think we can really help save a lot of money for owners. We can help save a lot of lives of dogs. And again, millions, I think, is probably hopefully an underestimation. If you look at, there's about 500 million pet dogs in the world. In the US, there's about 70, 80, 90 million, depending on who you believe, and about 22 million are the age. And you would do it part of their wellness tests up to twice a year. Again, $50. It's not something which is out of most people's reach. It's just an absolutely fantastic test for all those reasons. So in that example, if it's done in a centralized lab, yes, under the Heska deal, we get about $10. Heska gets about half of that, so 25. So we get about 40% of the price that goes there from the lab version, and the vets, put about the same on again. So I think we're getting a very good share of the revenue, and we're doing that. And I think why it's such a great deal for Heska, it's a great reason for people to use Heska's platform, because it's a differential product which no one else can do on point of care. So which is why they've given us a large amount of money, so they can be exclusively for the point of care. Now, that does leave open for us central labs, the big companies in the US. We're negotiating with now as well to launch in the centralized labs, and we expect them hopefully to be announced soon. So what we want to be is somewhere where any vet can just tick a box or use Heska's machine, or any other point of care Heska want to launch, to really test their dog to see. And then, of course, cats have exactly the same nucleosomes, so very plausibly we're launching a product. So there's $10 million we've already got, which is we only burn a few million a month, and this makes us profitable in Q1, so it's a very good start. How I'd see the 28 million, it's kind of sandbagging the revenue. It's about 60% of our expected burn over the next 2 years. Plus, it'll take some time for them to finish the adaptation and launch the product. But as that sort of tapers off, that those 28 millions come to us, the revenue should really be spiking up on the other front. So it's a really good deal for them. I think it's great for Heska because it'll really provide a great differential for their offering on the point of care, and it's great for us because it really shows they've done a huge amount of due diligence, as have all the other pet companies, intellectual property, the process. And the vet cancers are almost exactly the same. We got almost exactly the same results in human blood cancers as if we did in the dog blood cancers. So it's a great start for a whole lot of reasons.
For sure. I mean,
we're excited.
I was going to say, is that, I mean, when in some of the other conversations that you mentioned, that you've been talking about with some of the labs that it sounds like are also looking at NuQ, was this deal quite validating for even their due diligence process and wanting to work with you guys?
Yeah, I mean, they go through everything.
Sure. I mean, obviously they're going to test the science.
No, they do.
But this is a big deal. Let's be frank.
Yeah, it is. And, if I did got anything wrong, and I did get wrong with timing, they go through a really long due diligence. I mean, they want marketing. They want to make sure no one knows it's definitely going to sell millions of tests, but none of them are going to do it unless they think it can sell 3, 4, 5, 10 million tests each. I mean, they're not going to do this as a marginal product. And Heska's certainly not going to give us $28 million. It's going to sell a few 100,000 tests a year, if that's their expectation. So they've got to do the marketing, they've got to do the product work, they've got to do the stability, they've got to do the intellectual property, and they've got to do the market to make sure that this is, and, I think it's a fantastic validation. And I think we will have other deals, which just keeps all that incredibly exciting for what we do, and validates the platform in vet, which then should validate it for other animals, should validate it also for the human cancers. And then you pile in all the other stuff we're doing on top of that. It's going to be a really exciting few years. I think we're really on a good course now.
All right. Well, I'm not going to end the interview just yet. I still got a whole bunch of other questions. Okay. So
I'll talk as long as you want.
No, I appreciate that, man. So tell me about what NuQ is replacing, in essence. What does that competitive landscape look like? You kind of touched on it a little bit, but I kind of want to get a better picture about, is this displacing some of the bigger players in vet right now? Love to hear some more color there.
So NuQ Vet replacing absolutely nothing. No, certainly not in the biomarker market. There is nothing which detects cancer in dogs in a truly routine test. Now, as I said, there's some complicated tests which are just coming launched now. But in the human space, there are some markers. I don't know if you're familiar with them, but CEA, PSA, you've maybe heard of. Those kind of things don't work very well, but they are low-cost ELISAs. And, why is PSA used all the time? No doctor has ever waxes lyrical about how good it is or how accurate. They use it because it's a low cost. They can tick a box, and it can be quite useful over a period of time. But in the human space, there are some low cost markers which have been around forever and don't work very well. But in the vet space, none of those markers work. So we're not replacing anything whatsoever. Apart from very frustrated vets and owners, because often they have to spend a fortune on scanning or other tests. And it is or it isn't, and there's not much they can do. Because if you think about it, animals, this sounds obvious, but you don't think about it until you think about it. A dog is not going to tell you it's feeling sick, and if you're not really noticing, it can be quite late stage cancer, so it's quite tragic. Either you have to spend a lot of money, which probably doesn't work because the late stage cancer is horrible to treat. So it's horrible for the dog, it's horrible for the owner. So I think all we are providing is something really good and new. There's absolutely nothing out there whatsoever. It's which is again why I think it's been a great new use for our platform while we were waiting for the pandemic trials to start up again. It's just, I can just see no downside. We're not replacing anything. There's nothing that works. We can provide a very low cost offering. We make a lot of good margin with it. It's millions and millions of tests. I think at least, it's certainly not impossible. It could be in a few years' time, 10 million tests a year or more, particularly when you add in all the other animals and stuff, even more than that. So it's a validation of our platform, and it shows we can commercialize. We've really broadened the team. Dr. Tom Gutierrez come on the vet side quite recently. He was a very industry, legend's too big a word, but certainly very well known, very well respected. And had his own set of vet hospitals. He also worked for Antec, which is part of Mars Group, the biggest pet company in the world. And he left the biggest pet company in a very good role in business development and came to Volition to run our program. And that also, I thought, was a great validation because what we do well is the platform, and this is going to be a model we use on the other commercializations. We hire a good team, but we never want to become the sales team. We never want to become the lab. We never, all those things. So we can grow almost as fast as a software company because we can, all these companies have large drain pipes of sales teams and marketing teams and labs to run the tests. Being an ELISA, we need to do none of that. I mean, if you look at Exact Sciences, which is the human space for colorectal cancer, they have to have a massive facility in the US, Minnesota, because it's a test which you poop in a box and send it in, and so it's got to be done in a centralized lab. It's quite a complicated test. Where, so you have to have a large sales force, you have to have a large lab, therefore a huge burn rate. We don't need any of that, and we're never going to need any of that. We're never going to. What we've done is develop a platform. Now we're going to be using it. So the model we use for NETs and the human cancers now, it's worked so well in the vet. Find a few very good industry people, put together a commercialization team. Now we're always going to produce the key components ourselves because that's what we do. The Silver One facility, which is just down the road from here, down there. Again, 8,000 square foot, but we can manufacture everything we need for the European market and contract out everything else. So I think we can become highly profitable and really in a very broad range of different products from this platform.
Got it. You know, I'm asking, this is one question, like in knowing Volition for years and especially watching when you know, you launched the NuQ, or basically your technology for the vet market. And now this big deal just coming out. By the way, we're recording this on Thursday, April 14th. So this deal just happened. But now that you've seen this deal come through, has that conversation even happened where you're like, hey guys, you know, look, we understand from, you know, just a societal perspective of, hey, we want to, you know, obviously we feel that our technology is breakthrough. It can help, you know, on the human side. But from a business perspective, do we just go all in on vet and just, you know, cool, all this got us to here, but here we go. We are now commercial stage. We're finally commercial stage on this side. Like, do we just push our chips all in here and just maybe let, you know, maybe come back to it at some point? Like, I'm curious. I'm curious if that conversation's happened in that boardroom and being a fly on the wall there.
Yeah, look, we obviously think about strategy a lot, and that's a big part of what, as chief executive, should be doing. I think just a quick story, I guess, it's something
Sure.
I've always liked. The difference between a leader and a manager. Actually, my uncle, who was a priest, just recently passed, told me, and it's perfect. He said a manager's job, if you're building a railway, for example, in the old days through a jungle or a forest or whatever, is to make sure everyone gets paid, the tracks are laid on properly, and, you know, people get paid, and tigers, lions, or bears, whatever gets shot, you know, and everyone. But he said it's often it's a leader's role to climb up a tree and think, oh, we're going the wrong way, we're building in the wrong direction, you know. And you've got to have a lot of both. You've got to have all the processes to build the railway, but you've also got to make sure you go in the right direction. But I think what our strategy has always been has been to provide the platform. So we are going all in so far as we have a vet team which does nothing but vet. And you know, so what the team in Belgium developing the platform, and it actually it all helps each other. So in the vet side, we're developing a point of care, and Heska's doing some, and so are we, for different things. That can be used in the human space. When we develop a platform like HIA in the human space, which is a machine in every hospital, that can be used in the vet space. So by providing the platform and the basics, we can really do all those things at the same time. And then I think it really helps it was all developed for the human space and using vet, but now the vet's starting to help us in the human space. So the way I would see it is, you know, we've got the vet deal. It was negotiated by the vet team. It's produced in Belgium, and we'll have the new American team. But all the basic work we're doing on the platform can be used in the vet space, but just as easily in the human space. So it's a tool that can be used in so many different areas. So I think you'd have to say we've gone all in the vet space. We've got one deal and a massive deal. I think we've got some other ones closely following it up. They won't be exclusive, I don't think, so there won't be the upfronts, but having the biggest vet companies in the world selling your products is huge. I mean, they have hundreds and hundreds of salespeople. So we're going all in on that with the vet team, and we're making a NETosis team and a cancer team to go all in those areas. but we don't need a large team. I mean, the vet team may be a dozen people at the moment or less, including everything going on. And that's negotiated this deal, is launching the products, because we don't need all the sales team. I mean, going all in could mean trying to sell it yourself, trying to run labs. It's not the business we're in, and we don't need to do that. So we're always going to be small teams of people who can launch in different areas. And in the NETosis area, that could easily be with one of the big international companies, because sepsis is obviously so huge. So no, I think we will be doing other things, and I think we can do that very easily with the team we have. And I think the rising tide, or the research in everything, really helps. Because people said also, why don't you just sell off? Why don't you spin off that? Good idea. We certainly thought about it, and that may happen in the future. But at the moment, it's a great symbiotic relationship. We're helping each other develop this fantastic platform even better, because we're very mindful too. We have a great platform that's launched. It's fantastic. But what we're making sure we can do is also launch the next generation and the next generation, which is where the NQ Capture program comes in, NQ Discover, because there's always going to be a lot of other things which, you don't want to be dead in the water with a platform while other people are developing new and exciting things, and but again, they're kind of different groups. So there's the vet team, product team, there's the high tech development team, some in Belgium, some in California, there's the production team down the road. So we're trying to sort of section out the different groups to make sure it works as a unit, but they're all doing their own thing. That makes sense?
Yeah.
Answer, but...
No, yeah, I hear what you're saying. But so just to quickly wrap on the human side of things, because I think everyone at this point, at least to me, it's pretty clear. We get it. Here's the vet opportunity. We are going all in. It sounds like there's some things in the pipe. But on the human trials side of things, now that, we're kind of getting closer to endemic stage here for COVID, because that was a huge, just stopped everything, of course, back in 2020, not so much anymore, which is, we're happy about. But where are we at on the human trial side of things? Has that started back up, and where are we at in terms of regulatory and approvals, all that stuff?
Yeah, so a mixed answer. So basically the human side in cancer with our platform, human side on everything put together, NETosis, which I mentioned briefly, I won't go too much into depth, but NETs are your body's primary defense mechanism, which if it happens too much, you probably all heard cytokine storms and all those kind of things which are produced. You basically drown, plug up your lungs with the NETs, and we can measure them perfectly. So I think we've identified this could be an absolute blockbuster product we can launch right away. Human cancer is fantastic, but it does take a long regulatory process. We'll be announcing soon what we've just taken on a regulatory affairs specialist in the US, who came from, who works in office in California, came straight from Grail, which is one of the big companies. And we'll be announcing what our strategy is for NETosis in the US. We're expecting CE marks on the product this summer. So we'll, now, you won't get the revenues for next year. You launch it and it takes time, to go through the process. But if you look at our website and NETosis, I think it's going to be absolute blockbuster for a whole lot of reasons, and something which will be taken by every one of us a lot of times regularly. Because if your nets are building up, it's very bad news from one of a few things you really don't want. And sepsis kills you like COVID, because it creeps up and kills you when you don't quite sure. You think you're fine when you're not, and we can measure that very quickly and easily. On the human cancer side, we've kind of been trucking on a bit in Asia, as you've probably seen. Taiwan has been collecting the lung and colorectal. We had some very good data from them. We're working with the Chinese, but obviously they're still a bit busy with COVID at the moment. You've probably seen in the news. And the human trials, we're working now. What's the process we have? The blood cancer ones were also paused during the pandemic, or not paused, but slowed down tremendously. But we used the time to shift from microtiter plates and frozen samples to fresh and the machine, so it can be very high throughput. So that's all ongoing, and we'll have a lot of updates on that. And with the NQ Capture program, it's actually really working extremely well, which is kind of the next generation beyond our very simple platform, which has the promise of being very accurate, and it's still an awful lot cheaper than everybody else. So we're just in the process of now working through what can we still use on the old platform. And it's obviously worked incredibly well on the blood cancers in dogs, blood cancers in humans. It's working in lung and colorectal, but could we skip that generation and go to something really, really, really cutting edge? So we're in the process of working out that now. But in the meantime, the platform as it is does NETosis extremely well. The blood cancer, the cancers we detect in dogs extremely well. So we're just trying to work through the rest of this year while we launch the vet. As you said, that's the focus, the vet and NETosis. We'll work through that, but so we'll probably have a much more coherent, complete strategy on how that looks. Are we going with the current platform? We're going to update it for all the things we now can do, which is really exciting. And we'll start that process, I guess, on the next earnings call and have it through the rest of the year. But the big news in the short term will be very much on the animal cancer and the NETosis.
Very good. So on the, I have a capital allocation question for you because, healthcare diagnostics companies constantly going back, having to raise capital, do another test, right? So, but Volition's especially right now with the Heska deal and some other things, it sounds like that are in the pipe. It's almost like it's been slightly de-risked in a sense. So by having this vet line, does it open up the possibilities now where you basically can self-fund some of these trials and get some of these things faster to market and not have to continue to go back to the bank and say, all right, we need this to, get us here and whatnot? I'd love to hear your thoughts there.
Yeah, absolutely. So obviously we've had to raise money because, developing a platform. I think you'd have to say a couple of things. We've done it extremely cost effectively. We're a couple of million a month now. If you look at some of the big companies, they can lose a couple of $100 million a quarter, and they've launched products many years ago. So it's all in process. So what this has done, yes. So vet has now become a very big profit center for us. Obviously, 10 million up front. There's 18 million more in milestones in the sort of short to medium term this year and next, which go a long way to getting our burn rate. And then the revenue should start really kicking in next year from all the sales, because obviously we didn't sell it for 28 million. That just gives them the right to sell on our behalf exclusively. And if in the lab market, $10 a test and potentially many tens of millions of tests a year, I mean, it's very profitable and it makes a lot of money. Everyone says, it's like any political question, can you guarantee you never raise any money ever again? I mean, I think we've got some big inflection points. I think one thing we are lacking still is some very good institutional investors, because we are doing something different, and our market cap has been quite small. So I think there's a possibility in the next year or two we will do a raise. I think we'd really not want to do it until there's been some very big inflection points and without some very good institutional investors and funds. But as you said, it's really changed. Now we are making a very significant percentage of our burn rate in revenue, and the earning from our tests. So it has completely changed the picture.
Absolutely. So you mentioned some of these inflection points. So, I mean, what, in your opinion, what are some of these inflection points that, if realized, that will lead to the growth in shareholder value in your estimation?
Yeah, and it's always tough. We announced a big deal. The shares haven't gone in the last couple of weeks, but that's, the market is just that way at the moment. I would strongly expect we will have more vet deals and with large companies, companies. That's a huge validation again, and they'll take a few quarters to get going. But again, that's some serious revenue at a very good margin coming through. And we're moving into other animals, starting with cats, other products like monitoring of treatment for these cancers, potentially also many millions of tests per year. All of that I expect, in the next end of this year through next year. NETosis, I don't think the market really understands it at all, which is understandable because it's a whole different thing that we're doing. Again, same platform, very little extra development time or effort, but potentially absolute blockbuster. And it's ready to be launched through this year and through next year. So expect a lot on that. Of course, I didn't mention it, but we are doing some quite innovative things with our platform, which have strong potential, I think, now to be quite either enabling for other companies in the sort of expensive end of the range, in the liquid biopsy market, or completely transformative and disruptive. So, maybe this year, maybe early next year, I'd expect some information coming out on that too, and it potentially could be very transformative for us and the industry as well. So when you add in the vet, all the NETosis stuff, and then of course, all of the human cancers that we, I think, really have great products in as well. We've got a fantastic package. And again, that's at a burn rate, which is really amazingly low for all the things we're doing, because it's a platform, and the platform can be used in so many different ways.
Got it. Hey, real quick on the NETosis. We've talked about this, and I haven't asked just a direct question on that. And I'm sure there's some folks out there that probably want to understand, because I mean, literally on your website, there's a whole page just on what is NETosis here, and it shows you the whole video. But what is the potential for this product? Let's say in your estimation, from what you can tell us, in 3 to 4 years.
The total addressable market. If you just take it as someone, when you enter hospital, you get tested. When you leave hospital, you get tested. If you're in intensive care, you get tested, every day or a few times a day. You're looking at tens of billions of dollars per year in total addressable market. Now, we're not going to get all of that. That's total addressable. That's for, we have the only really good product, but it's just huge. Everything we do, if you add up all the different aspects, all the different pillars of what we do, on, I think, quite reasonable assumptions, you're looking at $70 billion a year in total addressable market. Now, we'd only get a fraction of that, and only a fraction of that would come in, but it's huge. We're an absolute elephant country. So NETosis, if you add up every time you go to a hospital, every time you go to the doctor's office, you probably want to get tested as well. Because if you have a high level of these in your system, and it starts to tick up, you can be in serious trouble in a very short amount of time. So, and because our test can be very low cost, can be run in any lab, I cannot see how, unless we're missing something, which I don't think we are, I can't see why it's not going to be given to everyone in the hospital pretty much every day. So I can imagine how much that's worth worldwide. And that's something which can be afforded worldwide because, again, the cost of goods is very low. We want to keep it low cost, democratic, out there for everybody. You're talking just an absolute blockbuster product, millions and millions. If you take a comparison, CRP, C-reactive proteins, an inflammation marker, I think certainly for NETosis, we can do an awful lot better. And NETosis is a massive problem. 80, 100 million tests per year. And if you multiply that by what we're getting now, it's just eye-watering how big this could all be. And we're talking, a couple of years, not 20 years, to get to where we could be really dominating a lot of different markets. Because epigenetics is a really big part of a lot of different things which are very important to us. And we've developed a platform. We have a team. We're a listed company. We've kept our nose clean. We've got quite a solid stock. We've never done any silly fundraisers. There's not all those problems. So I think we're really set for success.
Absolutely. All right. And just real quick, this is probably a quick answer here. And because only a couple more questions, but On the NETosis side, I think you mentioned near-term CE mark, and then in the US, does that require FDA approval?
Yes, it does. So we've just hired a team to work through the US strategy, working with our current team. In the short term, we'll outline what the timeline will look like, how quickly we can get it done, and what that will mean. I'd expect that in the next few months. And so Europe and the US will have the first ability to sell the products in Europe this year, and it'll probably be a 2-year process, but I'll go through that in the US.
Gotcha.
For NETosis.
Okay, cool. All right.
Yes, FDA approval, 100%.
Got it.
That's what we're going to go for.
Got it. All right. Again, I've seen you guys present 10 plus years now, right? Feel like I've grown up in the business, and I was like, oh, good. I can see where I'm at in terms of my own understanding of the markets and companies, because Volition's at every event that I'm probably at right now. But still, to this day, I mean, what do you feel that investors maybe still misunderstand or aren't totally clear about when they think about Volition, in your opinion? Well,
you've hit the nail on the head a few times. We are people we have some extremely smart scientists who are really good at what they do. But, we have come a bit from left field. We're spread around the world, which made perfect sense because we didn't have a lot of money. If this facility in Cambridge, in England, we paid just over €1 million for this. It would cost that a year at least, or more. So we've done it a bit differently. We've swum in our own lane. And as you said, there's always that thing in everyone's mind. Why are not the big guys? Why are they all focused on things which are not working? I mean, and we can say that now. They're probably not going to work, and they're really not working. So, but we haven't met a lot of our timelines, which I understand. We don't. It's very tough to know how long does an epigenetic platform take to develop. We make estimations and things, have to be reiterated. But we want to make sure we didn't launch product until we're really ready, and we really are ready now. So it's taken longer than we thought, which obviously goes to then some people start to jump to sort of doubt, or the whole thing real. But now you can see some very big people, including Heska, absolutely think it's real. They put some very large real money down. So I think, but it doesn't. I don't think you can get too worried about it. It is what it is. We've done something very different. We've gone our own way. I think we are very close to really making it. So it is what it is. But I think it's understandable. We were doing something quite different, and we're not the people you'd expect to be doing it in those big companies. So I understand.
Yeah, no, for sure. And I'm going to ask one more devil's advocate type of question here. I ask this to every company that I have on the show, but for you, what would you say are the potential downside risks for Volition, in your opinion?
I think with a small company, it's always running out of money, and that could have happened a few times, certainly. I think when you are a company doing something different, as I said, a few steps forward, one back, one sideways, a few more forward, the teams can fall apart because, you want it done quicker and you want things to move. And our team has stuck together incredibly well. We've grown a lot, but we've kept the core people there. So I think failure typically is either running out of money or the team. So that was my primary concern all the way through, because I don't think there's any doubt what we're doing is now works. It will work, and it'll work in a range of areas. So, but I think, as you said, you've got to keep your eye on a lot of things and make sure you're making the big decisions right, because that's really what's going to make the company succeed or fail. And we've made some big decisions over the years. I just, you never. It's actually my dad's one of his favourite sayings: if you're not making any mistakes, you're not making enough decisions. So you are going to make mistakes, and sometimes you just got to live with it and fess up to it. I think just briefly about 5 years ago or 4 years ago, we went to launch with Denmark, and look, the platform wasn't for reasons which actually I can go through, and actually worked out very well for us. But we had to put our hand up and say it's not there. That's when we bought this facility and hired a lot of very good people to get it really working well. And those kind of events can be very, very bad for an organization. We stuck with it. We stuck together as a team, and we got it done. But it could easily have gone the other way if we all started infighting or run out of money. So now I think it's just making sure we're making some new big decisions. California, the lab there, the capture side, moving to vet and NETosis. I think you have to say it's working now, but I mean, it was also another very big decision. But I think we're getting there.
Absolutely. All right. It's my last question. I promise. Okay, fine. All right, fine. You left it open for this. So I got two more questions then. And this one I'm asking to every company as well. But how much, if at all, have shareholders influenced your decision-making process, if at all?
I think, good question. I've never thought of this. There are quite a few shareholders, some of which we know together, who I do have a lot of time for and I listen to. Sometimes you just get, things change, things haven't happened in time. You get quite angry, aggressive kind of people, which, do I like? No. Can I handle it? Yeah. So do I listen to them? Not really. I mean, and I can't really, if they ask you questions you can't answer. You get angry when you don't answer them because you can't answer them because it's obviously material, non-public information. So, but I think it's very important as chief executive. I'm available to people all the time. The most important time to pick up the phone is when you really don't want to, because something hasn't happened, or I think it's very easy to do victory laps when everything's rosy, but it's I think you're judged when you pick up the phone when you really don't want to talk to someone because something's not the way it should be. We had one quite aggressive activist shareholder, I think you probably noticed a few years ago, and it basically said to me things which I thought were really not good, and he said basically, if you don't do this, then I'll do what he did, and I said fine. If we lose, we lose, but you do the right thing, you do the right thing. So I think, like anything, people whose opinion I value because they know things I 100% listen to and do what it is. But that's one of my, again, I have a lot of favorite sayings, but don't be worried, don't follow the opinion of someone whose opinion you wouldn't seek. Because they're not, I don't know if that makes sense, but,
I get that. That makes sense.
I get criticized a lot, and fair enough, and if I can't take criticism, I shouldn't be what I'm doing. It's fine. But so you've got to have reasonably thick skin, but you can't be too thick skinned not to listen. So again, it's a contradiction somehow, but you've got to stay open to listening, but not be buffeted. Like a sailing ship, you've got to have a course and stick to it. If you sort of come around any wave and change around, you can kind of get lost. But so yes and no is a short answer.
Got it. All right. So to close this out here today, and another question I asked everybody here is my last question is, do you enjoy being a public company CEO? I asked that candidly just because, it can really suck sometimes, and so I'd love to hear your opinion there.
Yeah, I think as they say, it's the very best of days and the very worst of days. Yeah, sometimes no, sometimes absolutely. But I think, this sounds counterintuitive, you just can't, failure cannot be an option. You can't think, no, I'm not going to do this. Some days you love it. I love the people I work with. I love what we're doing. I think, I would like to do something special in the world and do something really meaningful. But sometimes it's not pleasant. But, I've not for one day once have I thought about quitting, because ultimately, once quitting is an option, you shouldn't be CEO, because you are going to quit. Because there's going to be days when it just hasn't gone the way you wanted, and you get, so yeah, overall, I'm very happy doing what I'm doing. But yeah, there are sometimes, some days you're not as happy as others, and I think to be a really good CEO, you've got to do a lot of work. You've got to put in, it's a grind. You've got to work your way up. You've got to, when we got listed, I must have seen 60 different banks before someone IPO'd us, because we were very small. So yeah, I do like it, but yeah, some days, some months aren't pleasant, but that's life. There's nothing. As the old saying goes, it's not yours until you paid for it. So I think all this stuff definitely makes you stronger, and I'm very happy and glad I had this experience.
Absolutely. All right. Well, with that, Cameron, where can our audience go and find more information on Volition?
So our website is volition.com, VOLITION.com. There's some great videos on there. We talk about the science. We go through the process. Also, myself, as you say, we've been to a few conferences. We like to do investor forums, and Scott, our head of investor relations, is quite a few as well. You'll see me at some bigger ones and throughout the year, and JP Morgan and things like that. But I guess the website's the best way to get information on us, or to come to one of the conferences where we're at, or listening with people like yourself. It's, I think, also very helpful.
Very cool. All right. Well, Cameron, thank you so much for joining me today. I really do appreciate it. Good luck. Stay safe. And I look forward to our next update sometime soon.
It's been a pleasure. Thank you, everyone.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.